Hello everyone, it's Mark. Welcome back to my channel. Today, let's talk about mortgages because nothing gets me going early in the morning like real estate finance. Just kidding, but it is an important topic. Now first, before we get started, if you could hit the like button, hit the subscribe button, I'd really appreciate it. And let's get started. Now, some people will tell you that the 30-year mortgage is always better than the 15-year mortgage. They're wrong. What is true is that for any given personal and financial situation at any given time, one mortgage is better than the other. But what does that mean? Let's unpack the mortgages, let's discuss them and dissect them, and let's find out. Now, first of all, I'm not going to talk about adjustable mortgages. I've never really liked them, and in today's low interest rate environment, I think they're terrible. I don't think you should do them. Okay, so our choice is 15-year mortgage or 30-year mortgage. Which is best for us? Let's get some quick terminology out of the way. What is equity? Equity is the difference between what you owe on the property and what the property is worth. So if the property is worth $200,000 and you have a $150,000 mortgage, then your equity is $50,000. Now equity is good, but equity is not the same as cash. Cash is better than equity. Why? Well, first of all, cash is spendable. You can't directly spend equity. To spend equity, you have to convert it to cash, which you usually can do, but at a cost. You have to sell the property, in which case there are closing costs, or you have to refinance the property, in which case there are also closing costs. And if you're selling it, there are also sales costs as well. So you can convert equity to cash and then spend it, but you can't spend it directly. You also could get a home equity line of credit. That would be one way. But regardless, unless you sell the property, you can't spend all of the equity. And even then, you're going to have closing costs, so some of that is going to be reduced. So rule one, cash is always better than equity, but equity does have value. Why is this important in our discussion? Well, it's important because the big difference between a 30-year mortgage and a 15-year mortgage is cash versus equity. With a 30-year mortgage, your payment is going to be less, but you will pay more interest over the life of the loan. With a 15-year loan, your payment will be about 40% more, and you'll pay less interest over the life of the loan, and you'll also build equity faster. So why is it only 40%? Well, it's because with a loan, the amount of interest that you owe is based on the outstanding balance that you owe. So the bigger the loan, the more you owe at any given time, the more interest you pay. And with a 30-year loan, it takes many years to start making any kind of a real dent into that loan balance. With a 15-year loan, you're paying much more toward the principal early in the loan, so you're paying less interest, so a lot more of your payment goes to paying down the loan earlier in the loan. Okay, so let's take a look at personal financial situation, what I mean by that. It's very simple. If you can't afford a 15-year loan and that 40% extra payment, then you get a 30-year loan. That's easy. So that's where I was early in my career when I first started buying real estate. The prices were very high. Interest rates were also a lot higher. So a 15-year loan was out of the question. I had no choice but to get a 30-year loan. And there's nothing wrong with that. A 30-year loan with buying a property is better than not buying the property at all. Okay, so let's take a look at the second scenario. You can't afford a 15-year loan and you're deciding whether to get a 30-year or a 15-year loan. Your payment, as I said, will be higher with a 15-year loan, about 40% higher, but you will pay off the loan sooner. Now, typically with a 15-year loan, you also get a better interest rate. It's usually about a half a point to a point or more because the lender doesn't have their money tied up as much. That has tightened in recent times, so it's much less of a factor. Additionally, with the fact that interest rates are so low right now, the fact that you're saving interest over the life of the loan is a lot less important, because with either loan, because interest rates are so low, they're in the mid 2s to low 2s, you're just paying less interest each month and therefore less interest over the life of the loan. So that makes a 30-year loan more attractive. Let me point out one place where a 30-year loan almost always wins, and that's if you're talking about a rental property. Now, if you're buying a house for you to live in, you can almost always refinance that later if interest rates drop and get a better rate. That may or may not be true with a rental property. Lenders like those less because they think you're more likely to walk away from the loan if you're not living there than if you are living there. Also, some lenders have hard limits on the amount of loans that you can have. So in cases of a rental property, it may be difficult or sometimes almost impossible to refinance that loan and take money out. So in that case, the fact that you've got the cash from the 30-year loan is much better than if you got the equity from a 15-year loan. Additionally, if you're buying a rental, you probably want the cash flow rather than the equity buildup. So for a rental property, I will usually recommend that you get a 30-year loan. Okay, so we're buying a house to live in, and we can afford a 15-year loan or a 30-year loan. Which one should we get? Well, again, as I've discussed, it depends on whether you want the equity buildup or the cash, and cash is usually better. But there are certain instances where it may make more sense. For example, in my case, I got a 15-year loan. Why? Well, have you ever heard the adage, happy wife, happy life? I have. I live it, and my wife wants to pay off the house, so I picked a 15-year loan. I don't know if I can pay it off by the time I retire, but with a 15-year loan, we will make a huge dent in the mortgage at the very least when I retire. So that's a big benefit for me. With today's low interest rates, the 15-year loan doesn't make as much sense as it used to, because normally you could get about a point savings. So if a 30-year rate was 5%, you could get 4% on a 15-year loan. Those differences have tightened. It's more like a half a point. And because interest rates are so low already, is it really worth going from a 2.5 to a 2 or 2.25? Maybe it is, but it's not as big a deal as if you're going from a 5 to a 4.5. So I think in these times, from a financial standpoint, the 30-year loan makes sense. So let's go back to what I was talking about before. Your personal and financial situation. Personal, can you afford it? If yes, and you want to, then go ahead and do it. Okay, so let's circle back. When I said a point in time, what I meant is, what are the interest rates like? And right now, they're very low. The difference between a 15-year loan and a 30-year loan is only about a half a point. So a 15-year loan doesn't make as much sense. That's win for the 30-year loan. What about your personal situation? Can you afford it? No, then that's a big win for the 30-year loan. The 30-year loan wins out in that case. What about your personal situation? How important is it that you pay off your loan? Because you will have peace of mind once the loan is paid off. At that point, you will no longer have to make a mortgage payment. You will only need to pay your property taxes and your insurance. 3 payments a year, and you can live for the rest of your life. How much is that worth to you? To me right now, where I am in my life, it's worth a lot. That's why I chose the 15-year loan. So quick recap. Personal situation, how important is it to pay off your loan? Financial situation, can you afford a 15-year loan? Point in time situation, what are the interest rates like overall, and what's the difference between a 15-year and a 30-year loan? Those are the criteria that will help you make this decision. And like I said, right now I think the 30-year loan is probably better. I happen to choose the 15-year loan myself because I wanted the equity buildup and I wanted the peace of mind from paying off that house sooner than later. So that's our recap of mortgage today. I hope you enjoyed it. If you've got any questions or comments, go ahead and put them down below and I'll respond. Also, if you could do me a favor and hit the like button and the subscribe button, I would appreciate it.